Welcome to MarketBeat Monday. So glad to have you with us, everyone. We are here with Chris and Thomas, our MarketBeat analysts, who are with us every Monday to go over a look at the stocks that you put in the chat. We are doing a live cold look at some of these names, so we haven't had time to prep. We're going to look at as many names that come in the chat as we can. If you want to make sure we cover a stock you want us to cover today, just do a super chat. That's a quick way to make sure that I see it and I get to the name you want to talk about. And also, I love to hear where everyone's watching from, so you can put that into the chat too. Welcome to our viewer from North Dakota. Love to hear we've got some Midwesterners watching today too. All right, Chris, Thomas, let's get to it. There's a lot to talk about in the market today, and it's good to talk about it when we're seeing green like we are today. Look at this heat map. A lot of green in the market. A good way to start the week so far. What's behind all this green? Why are we seeing that?
I think some of it is relief from oil prices. Oil prices, I mean, they're up. They spiked from the war in Iran, but they seem to have hit a top, and today they fell about 4%. So that's a good news for the stock market. So it kind of limits the upside of risk as far as inflationary pressure from oil. Perhaps oil will keep coming down. We'll have to wait and see about that. But right now it does look like pretty decent news for the stock market.
Yeah. Chris, do you think that there's anything other than oil behind the moves that we're seeing today? Is there any other positive moves that are bringing the market higher this morning? Or is it really all of that geopolitical oil story conversation that's been moving the market so much over the last couple of weeks?
I think it's about oil. I think it's about the idea that it signals the idea that the timeline that the Trump administration has been talking about for the Iran conflict is on target. So it's going to be somewhere in that 4 to 6 week range, and it's not going to be anything longer than that. And that's what I think the markets really need to hear, is that there's going to be an ending, and the ending is going to come sooner than later.
All right, very good. Let's get into some other potential headline movers this week. Yeah. Obviously, oil and the conflict in Iran is going to continue to be a potential mover this week. We also have a major conference going on right now. Let's talk about Nvidia. Have we found anything in that conference already that's kind of moving the markets in some way?
Well, Jensen Huang forecasted $1 trillion in orders for his GPUs over the next 2 years, which is pretty significant. I mean, that's a huge number. Certainly affirms this robust outlook we have for Nvidia's growth. Amplifies the outlook. Tells me that the AI bubble is still alive and well, still growing, still generating lots of revenue. So right now, Nvidia still looks pretty strong. Stock didn't respond all that well to it. Came up about 1.5%. But still showing support, near record highs, in alignment with the last few months trading range. So to me, Nvidia is still percolating, still building its support base, still consolidating, ready for its next move. But the next move is indicated. It could be a really big one, another 100% upside for the stock, possibly triggered by upcoming earnings releases.
Yeah, Chris, I want you to talk about the Nvidia Palantir news that came out, I think, late last week.
Yeah, so late last week, the two companies announced that they were partnering to deliver what's called a sovereign AI operating system. So the layman's way of thinking about this is you've got the two giant AI technology companies coming together. Nvidia on the hardware side, Palantir on the software side, and they're essentially coming together to sell a complete prepackaged AI system for, you're talking about governments and large enterprises and things of that nature. The key words here are sovereign AI, because really what it means is that whoever is buying this system, whether that's a government or a large corporation, they are going to be able to keep total control over the whole AI stack, the models, the AI models, the data, the AI models, the applications. Nothing is going to be going to a third-party cloud provider. And that is a benefit to, again, both NVIDIA and for Palantir. These are going to be large contracts, are going to be long-term sticky contracts. It just shows that both of them are very well entrenched in an area of of that AI build out that isn't going to go away anytime soon.
Very good. One quick question on Palantir. Do you think that it is a buy right now? I know we've had about a 16% rebound in the last month from the lows that it saw just a few weeks ago. Is it still a buy where it's at right now for you, Chris?
Oh, let me see here. I was looking at it when I wrote there. Yeah, well, I think it is. It's right now. It's really it's there. You're seeing a battle go on where it's trying to hold that resistance level around $150. It'll remain to be seen if it holds that level. Certainly, if it dips below that 150, it's certainly a buy. But I think it's a buy even where it's at right now, just because, again, where I foresee this going in the next 3 to 5 years, absolutely, it's a buy.
All right, great. Let's talk about, Thomas, I want you to talk about Dollar Tree's earnings report today. But Chris, while you're doing that, a couple of people have asked about Tempest AI, TEM. This is a name we haven't talked about in a little while. Sounds like there might be some kind of update. So look at what's going on with Tempest AI, Chris. Thomas,
Okay.
let's talk about Dollar Tree. It looks like they had a report today, right?
Yeah, they did report today, and the stock moved up about 6.5%. So what we're seeing here today is this market sold off last week and the week before that pretty hard in anticipation of what was expected to be kind of a weak report. Last week, Dollar General reported and gave some soft guidance, helped this market get down to a really low level. So today we rebounded. The news was exactly like Dollar General's. We had a strong quarter for the previous quarter. The guidance for the upcoming year is kind of soft. We're viewing it as cautious. We're looking for outperformance in the upcoming year. But more than that, the guidance affirmed growth, affirmed improving cash flow, affirmed the ability for capital returns, which in this stock are pretty robust. We have aggressive share repurchases underpinning stock price action. So to me, any dip will be a buy for this stock as long as that cash flow situation stays intact. So right now, what I'm looking for is this stock probably will rebound within its range, maybe get up to 140. And then later this year, if we do have outperformance, so we can see some new highs being set.
I want to talk about all of them in general, kind of these dollar store stocks. You've got Dollar General, you've got Dollar Tree. I think there was another one that you mentioned that kind of usually end up moving together. Do you think that now is a time to buy the dip on Dollar General too? Is the good news for Dollar Tree mean the same thing for Dollar General stock? And I'm just pulling up that chart right now too. They're, like you said, down so much. They did have some recovery today, but not much.
Right. I think that Dollar Tree may be the better play just by looking at the charts. It seems to have a little bit more market engagement. But as far as Dollar Tree goes, it's benefiting from consumer shifts. So lots of customers are moving down to lower price points. But at the same time, it's also rationalizing its footprint and remodeling and introducing these new higher price point formats. So there's like consumers shifting down, but also more choices and better stores and better operations all playing together. So we've got growth and improving profitability at the same time as cash flow and capital returns. So that's just really, to me, it's just a win-win situation for the stock price.
All right, very good. Thomas, I'm going to have you look up Rubrik. That's one that somebody wanted to talk about early on. That's RBRK. Chris, let's look at
Tempest.
Tempest, yep.
Yeah. So this is a company that we've talked about this kind of company a lot on the channel over the past few weeks. So this is actually a mid-cap company, or they've become a mid-cap company because of what's been happening with the stock here. The company is a tech company, but it's focusing specifically on healthcare, and even more specifically, it's focusing on the idea of personalized cancer care. The company uses AI, they use machine learning to aggregate a lot of molecular clinical data, and the idea is to match patients with personalized cancer treatments for them. Very interesting concept. This is one of those concepts that when you think about what AI could do in a very positive way, this is one of the things that gets you excited, this and just biotech in general. But having said that, we're looking at a company where short interest is running around 16%. institutional ownership is around 24%. That's pitting a lot of short sellers against a lot of retail investors, and there's institutions are buying at a very strong clip. It looks like almost 3-to-1 compared to selling. But again, the overall current institutional ownership is below 25%. So it's not as heavy as it could be. One of the reasons for that is the company's top line is growing strongly. It's still not a profitable company. It's a very similar story. It doesn't mean they won't be profitable. It just means they're not profitable yet. This is a long-term story, and there's some short-term trading going on with it. But it's one of those companies that you have to look at and say, do you believe in the story for the long term? Analysts certainly seem to. Stock has a price target that shows 54% upside from the price it closed at today. So long-term story, but it's caught in some short-term noise.
All right, a good look at that one, Chris. Let's look at Circle for you next, CRCL.
Okay.
All right, Thomas, let's take a look at Rubrik.
All right. So to me, Rubrik is a very strong company. It's growing very well and performing well in cybersecurity. The recent pullback in the stock price over the last 2 quarters or so, to me, is irrational because the company has been outperforming and raising its guidance, really showing strong traction. But I think what's happening is there's a real valuation concern here because even at its low levels right now, it's trading about 300 times current year earnings. And even with the robust growth outlook, it's still only about 22 times 2033's earnings, which basically puts it in alignment with the broad market on a forward-looking basis. So it needs to continue to outperform and continue to raise its guidance in order for its stock price to get traction from here. But I see that in excuse me. I see that in the cards, and so I think a rebound's pretty assured. It's just going to take a little bit of time.
Yeah, I think I want to pull up the analyst price targets on this one because that's also quite interesting to see that it's down quite a bit below those analyst estimates. Right now it's showing a 75% upside on consensus, but on the high side, you've still got some recent analysts who are putting the price target at 130 for this one. We do have a couple of downgrades recently, so I don't want to ignore that either. I'd say just in the last couple of weeks, there are some price target reductions. Do you think that that is something that investors should be paying attention to?
Well, that's certainly weighing on the stock price action. So, looking forward, we're going to want to see those results get the analysts invigorated back into raising price targets and lifting sentiment ratings, and that'll help the market get some more traction.
Yeah, how does Rubrik compare to some other cybersecurity stocks out there? Some of the other popular ones. I know CrowdStrike is a name, and somebody else wanted to talk about CrowdStrike, and you've talked about that recently. How does Rubrik compare?
Well, it's a niche player like all of the ones. But in this fractured market, it certainly has room to grow and to establish itself. It was really focusing on employee benefits and helps businesses, kind of manage those things. So looking forward, we're just, waiting for the company really to be performing and just to show some continued traction.
All right, very good. I'm not sure what was going on with my CrowdStrike one there, but anyways, I'm going to have you, Thomas, look up BRAI. This is a different name. I don't think I've covered that one before. So BRAI. Chris, let's get to Circle because I think this one is really interesting.
Yeah, so the excitement about Circle comes down to the idea of Circle, which is the ticker symbol is CRCL. This is the company behind USDC. That's a stable coin that's pegged dollar for dollar and backed by real cash and U.S. treasuries. So a digital U.S. dollars, that would be kind of the government's own version. It would be issued by the Fed, like digital cash from Washington. Stock's been moving up strongly. I believe that's just over the belief that the stable coin is going to become a reality sooner rather than later. It's essentially what the company is doing is they're providing the, I guess the way to think about it is they're going to be providing the sort of the infrastructure, the pipes that that these stable coins are going to flow through, which are going to be faster than banks, the traditional banking system. It's going to mean people can move this on weekends and on holidays and different things, much like we would move a lot of the digital currencies that we move today. That's why there's some excitement with the stock. Having said that, stock looks a little overextended right now. It's up over 100% in the last month. Again, not a lot of institutional ownership in the stock, although short interest isn't that high. But institutions have been buying it more than selling it. But again, just not a lot of institutional ownership to go with. Again, this seems like a long-term story where the stock might be a little bit ahead of itself right now.
It's wild to see so much growth in such a short amount of time for this company. To see it move that quickly. I was just looking at some of the recent price targets and analyst ratings for it too. It's not trading that much above those analyst estimates, even after that 100% spike in the last month. So it clearly was down at quite a low before. Any particular reason for all the volatility, Chris?
I don't follow the stock closely enough to give a specific reason for it, other than the fact that I know that there's been some debate on whether the whole stable coin thing is going to happen, when it's going to happen. But certainly what you're seeing with the price movement in the last month seems to be the belief that the stable coin is going to happen sooner than later. But I agree with you, Bridget. When I look at the price targets, I see analysts have been lowering their price targets. Some are well above the 120 it's trading at now, but people seem to get excited about Mizuho today. But that was interesting because Mizuho raised their price target by 20%, in fairness, from 100 to 120, but the 120 is lower than where it's trading at today. So
yes, interesting to see. All right, let's move on. Let's move on to the one that you are looking at. BRAI. Is this which one are you looking at, Thomas?
I can do BRAI.
Okay.
I think this company is called Brain, right? And it's an IoT company for farming, trying to use software, IoT, and AI to help farming. It recently just IPO'd. The chart looks pretty sketchy. There's not a lot of other data about revenue or profitability. So right now it's looking pretty sketchy. I think this market might sell off pretty hard before it hits bottom. And I think I'd wait to see this thing establish a good firm bottom and see a rebound happening, driven by some data and some stimulus indicators before putting too much money into this one.
I think it's a good time to talk about those IPOs and what investors can expect on that. By the way, if you want to take a look at an IPO report, Thomas just put together this list of the 7 hottest IPOs that Wall Street is watching this year. These are ones that either are about to IPO or are expected to IPO this year. And when they do, you can expect a lot of sketchy charts, a lot of action moving these IPOs higher. So Thomas, let's talk really quick before we move on to the next one. With an IPO like this company that we are just talking about, what can investors expect? Do you expect to see just a lot of different volatility in those first few days after IPO?
Well, it really kind of depends, but generally speaking, especially when these startup kind of companies, there's a lot of hype that goes into them, and they're trying to price in the future of these companies so that the investors aren't being left leaving money on the table. And so what happens is what you see happening here is like the market opened up at a high level and then really rocketed higher after the open. It went from like about $35 to almost $100 on the first day, and then sold right off real hard, and then sold off the next day. So we have a lot of people that bought this stock on the first day that are down by like 75% right now. And so that creates a pretty big amount of overhang. So even if this market were to advance, don't expect it to get up real high too quickly or to hold those levels, because there's plenty of people that are losing money right now that are just waiting for that to happen so that they can cut their losses and get out. So it's going to be a little while, I think, for this market to normalize, to discover where the price really is, and to get some traction to where it can be rallying or moving in a way where it's more predictable.
All right, very good. Thomas, I'm going to have you look up INVZ. Innoviz Technologies Limited, I believe is that one. All right, Chris, which one were you looking at?
You hadn't given me one.
All right, well, let's pick one
Well,
really
you had
quick.
talked about Geo Group.
Yes, Geo
said
Group is
something
the
about
one
that.
I had planned for you to talk about next. So very good. You're reading
Sure.
my mind. This is GEO. Someone
Yeah.
very early on had put this one down, and it's a new stock we haven't talked about. So, Chris, give us what the stock is about.
Okay, so this company is a REIT, a real estate investment trust. There's what they specialize in is the financing, development, and operation of secure facilities for adult and juvenile offenders, immigration detainees, and individuals requiring mental health treatment or substance abuse programming. There's a lot of interest in this right now, having to do with the reformulation of what ICE is trying to do. There's some talk that the company is going to be at the forefront of delivering the infrastructure that's going to be needed for gathering, I guess you would say, these immigrants that we're trying to deport from the country, and there's going to need to be a place for them to go, and that's what I'm seeing is the chatter about it. That seems to be that's been driving the stock price. It's up about 8%.
Yeah, it doesn't look like it's been driven too much though, because it's only up about 8% in the last month. It's on quite a big downtrend over the last year.
Yeah, the stock does seem to be. I think the reason for the downtrend was the fact that it seemed like there wasn't going to be a need to have their services in the country. Now it seems like that might be necessary. The stock does look like it's formed kind of a bottoming pattern. Mm-hmm. And again, these are REITs, so they're not necessarily known for growth, but analysts are giving this thing a consensus price target that's like $125 or 125% over its closing price today. So, and a lot of the analyst price targets recently have confirmed that. So, there's a story here. I would have to dig into the details a little bit more, because I honestly will say this was a company I hadn't heard from before, but it certainly seems like there's a confluence of things happening that could influence the stock. But I agree with you, Bridget. The stock hasn't moved a lot, so you have to be a little bit careful here. Sometimes you just have to trust that the trend is down for a reason.
Yeah. Interesting one. Thanks for bringing that one up. Again, it's a name we haven't covered here before. All right, I'm going to have you look at HIMS. This is a name that we've covered, but there's a lot of news last week. Curious to see if it's moved much this week, and a couple of people have asked about HIMS. So I'll have you look up that one. Which one are you looking at again, Thomas?
Innoviz. Innoviz. INVZ.
Okay. What is this? Oh, this is a true penny stock company.
Yeah, it is. It is. So this company is working on some solid state solutions for LiDAR, for autonomous driving. So certainly has a market and some technology. It's making some revenue. It's growing at a triple digit pace, hyper growth, revenue growth. So that's pretty nice, but no profits. That won't be until 5 or 6 years probably. So that will be a headwind. But other than that, analysts seem to be on board. Not a lot of analysts covering it, but they're looking at about 300% upside. Even the low target is offering more than 100% upside. So the stock is pretty well depressed, overextended, it looks like to me. And also institutions are buying. So as this market has been falling and hitting these lows, institutions have been scooping the shares up. So, I mean, there is some support for the stock. There is potential for a rebound. Right now, there are headwinds. So we're going to need to see a catalyst to get the market invigorated. But until then, what I see happening is, analysts and institutions are kind of scooping this thing up in the hopes that one day down the road, it will pay off. At 72 cents a share, it would be pretty easy to buy, quite a stake and not spend too much money on it, and then get a pretty big return without, very much upside.
Yeah, there's so much about this that's really interesting. Thanks for bringing this one to our attention because I think that there's a lot of interesting things that you just mentioned. For a penny stock at this rate to have 63% institutional ownership is very rare. We normally don't see institutions interested
All right.
almost at all in companies of this size. And then to see not only a 300% upside from analysts, but to see the number of analysts covering this tiny of a company. Again, if you've
All right.
ever toyed around in penny stocks, they might have one, maybe two analyst price targets, just at the smallest amount of coverage to where it almost is irrelevant. And here again, it's a pretty small number, but to have one, two, three, four different
Yeah.
analysts covering it in the last year is a lot.
Well, we do have some revenue here, being produced and some growth happening. So that's one reason for them to be on board. And this fact that there's so many of them tells me that the profit outlook is pretty decent, despite being so long to profitability. So there could be some volatility between then and now, but I would expect to see over the coming quarters, progress being made and some moves towards profitability.
All right. I like that. That's a super interesting name. Thanks again for bringing that up. All right, Thomas, I'm going to have you looking into USAR, UUUU, 4Us, and Oklo, OKLO, kind of same area, at least a little bit. You can look up one or any of those, whatever you feel like. All right, Chris, what are you looking at right now again?
I'm looking at HIMS.
That's right. Anything happened in that stock since last week?
Oh, just the fact that it's been up 50% last month, and actually that's probably 50% last week.
Right.
So by now, I think a lot of investors, especially those that have paid attention to the stock, they know what's happened here. The Hims and Hers and Novo Nordisk have been frenemies for a while, and looks like they kind of kissed and made up last week. There's a new agreement between the two companies that allows Hims and Hers to sell Ozempic and Wegovy directly to its customers. Previously, Hims and Hers had been selling the compounded version of it, and that didn't sit well with Novo Nordisk. So now the two companies have come together and they said, yes, now you can do this. And the stock shot up higher. To me right now, I think there's some concern and idea of, is the stock going to go down after such a sharp move higher? It looks like it's trying to consolidate right now. There doesn't seem like there's a tremendous amount of downward pressure on it, but from the relative strength, it's coming down just a little bit from being overbought. I think this is one you're going to have to have conviction on. It is climbing up it's about 25% away from where the analyst price target are. But I think notably, analysts have been raising their price targets since the news broke. And I'm going to be very curious to see what happens with the institutional buying, which has been mildly in favor of the buyers over the last month or so. I'd want to see if that breaks a little bit more heavily to the buyer's favor. But I think the growth story is here. Interesting thing is investors are going to have to wait about 2 months before the company reports earnings again, and that's probably when we're going to start seeing the first fruits of this new deal and if it's really taking root.
Yeah, one thing somebody commented saying that Hims is overbought and that profit. They don't have enough profit for the price that they're at right now, that their PE is quite high. Is this movement in the price all just in anticipation of future growth in earnings now that they're going to be able to sell those GLP-1s? I mean, that's what it seems like. Is it possible it gets ahead of itself here?
Yeah, I mean, it's always when a stock makes the kind of move that it's made, because like I said, it says it's up 50% in the last month, but really that's up like 50% in the last week. That's a very sharp move. Certainly, if you haven't been involved in the stock yet and you're looking to start getting involved, yes, you would ideally like to see a pullback from these levels. And it's not unreasonable that you might expect that. It's down about 3.5% in the last 5 days. It may have further to climb back, but then again, you have to watch it because it sometimes stocks like this they'll take that little dip and then they'll keep going up. So, dollar cost averaging may be the way to play this right now if you're interested in holding on to the stock. This seems to me a long-term play if you believe that the company is going to benefit from having these GLP-1 drugs available. Like I said, DCA might be a really good strategy going into before that earnings report in May.
Yeah. I also don't want to move on without mentioning over 45% short interest on this one right now. So there's a lot of attention.
Right. And that's a good point, Bridget, because a lot of what you see over the last month could be, or last week could be short covering happening. Thanks for bringing that up. That could be some short covering happening. And once that unwinds, the stock could tend to float down a little bit because shorts had a cover, stock popped, so there could be a little bit of that happening. But again, there's momentum here. Their earnings report in May is going to be pretty critical to see how that's going.
Good. All right, I'm going to have you look up one that we haven't mentioned in a while, SFM. I might have you look up two at the same time. So this is it's now being recognized as a safe consumer staple by the market, ? So SFM, and then also look up Alta at the same time. Alta is it a good buy the dip opportunity? Okay. It is down quite a bit right now. All right, so we'll cover those retail stocks in a minute. Thomas, let's get to the first one that you were looking at.
Well, right. So you said USAR, UUUU, and Oklo.
Yes.
The first two we can do together: USA Rare Earth and Energy Fuels. These are two, domestic uranium production companies. They're both developing mines and vertical integration, so they can be mine to magnet, help solidify our domestic uranium and rare earth supply chains. Both are pretty well positioned. Both markets are gaining strength. Just waiting for some critical masses to be reached as they, ramp productions or begin productions in the case of one of them, and then, progress with their vertical integration and the more downstream processes. But of the two, I think UUU is more advanced because it's currently in operations. It's at least mining and producing some uranium, if not the finished products. So it certainly has an early mover or first mover advantage, but both look pretty well positioned right now. Then Oklo, that's a nuclear stock. The other end of the spectrum, kind of the same industry, but the user of the fuels. This company reports earnings this week. Probably will not report revenue or earnings, not earnings for sure, probably not revenue. But what it is going to do is give updates on its progress and its pipeline. And I think that we will get some positive updates that potentially catalyze a rebound. Analysts have been kind of shifting and readjusting their targets, but they're still, pretty bullish on this name. The outlook is pretty robust. We've seen some deals being announced maybe 6 or 8 weeks ago that were pretty positive. So I am looking for some more news to come out this week. If we don't get it, it's possible this stock could sell off some more, but it looks pretty extended. It looks like the bulls are starting to regain control. It certainly is ready to advance. We just need that good news. I think it could come out this week.
Yeah, and Thomas, there's so much to look at with Oklo because we all saw this stock going just crazy in the fall, in that October, November timeframe. It was up at almost $200, and now it's back to 60. So much volatility in this name. The 52-week range on this one, again, is almost 200 down to $17. So this stock has been all over the place in the last year. Was that big peak that we saw really all about trading just on news and sentiment? Was there any fundamental thing going on with the company that led to that huge increase that we saw late last year?
So it was fundamentally driven in that the fundamental outlook was improved, but this is a sign of the market like really getting ahead of itself. So, these things are happening and this nuclear market is developing, and there have been positive regulatory advances that point to this company having revenue, and the market was pricing that in, only it's like 4 or 5 years from now, right? So the market priced it all in real fast, realized, it's going to take some time. So now it's sold off again. We're back down to where we were, last spring. Potentially we're at the bottom. We're certainly at a spot where it looks like a support base is being rebuilt. So we could get another big boost, another run up higher. Certainly, if the outlook starts to get improved, but until there is actual revenue and there is actual a clear path to profitability, expect volatility, expect the market to top out, hit resistance, and then to sell off after any big runoff that happens.
Yeah, I'd love to know personally, Thomas, are you bullish on these nuclear stocks like Oklo or SMR right now? Is this downtrend that we're seeing in both of those names a buy the dip opportunity for you? Are you bullish on that long-term outlook for these, or are you still a
Oh,
little wary of more volatility ahead?
oh no, I'm pretty bullish on these stocks. I think that they will be producing reactors. They will be getting their regulatory approvals. It's just going to be a matter of time. Oklo has the opportunity to produce some pretty solid data within the next, we'll call it a year or so. That could really juice its timeline. So just a few more years, we'll start seeing these things being deployed. Revenue will start, and then profits will come real soon after that.
Okay, really quick, just going back to the two other names, the 4Us and then the USAR. Sorry, I'm always getting you while you're coughing, Thomas. But
Yeah. I
do
think I
you
had
think that
COVID last.
these two have pulled down enough off of their highs to be a buy right now where they're at? So that's both USAR and the 4Us company. Are they down off their highs enough to be an attractive entry point right now?
Well, yeah, it looks like they pulled back to their support levels. They seem to have support bases where they are. So it does look like it would be an entry opportunity for a trader. And just be aware that there's always downside risk. You want to limit that with some some sell stops, and then be ready to take profits whenever you get a pop.
All right, very good. Thomas, I'm going to have you look up both IREN and Applied Digital. Had a couple people asking about those names, so see if there's any updates with either of those. All right, Chris, which ones were you looking at again?
I was looking at SFM, Sprouts Farmers Market, and Ulta.
Ulta, that's right. Getting a little bit more retail from nuclear and
Yeah.
minerals to more just generic retail. Let's start with Sprouts Farmers Market. This one's had a really rough run of it.
It really has, and it's one of those companies that seems to fit into. You would think it would be doing pretty well because of the niche it's in. I mean, we're talking about fresh, natural, organic foods, but the stock's been taking a tumble over since the summer of since last summer. That's because year-over-year sales growth has been declining. And their earnings have been under pressure. One of the problems that the company is attributing to it is they're saying that consumers are being challenged by high grocery prices. So you would think that a company like Sprouts Farmer Market might be targeting the consumers where they wouldn't be as price sensitive, but apparently that's not the case, and it's been affecting the store. It's been affecting the stock. Right now, even with the stock where it's at, it's approaching overbought territory. So it's down about 40% over the last year, and it's moved up about 18% in the last month, but now it's already starting to look like it's hitting that overbought range, which would be in line with resistance, where it's found resistance before in December and then again in January. So I think this is one of those that it's a story that time's going to tell. One of the reasons why the stock, why investors have been responding positively to the stock, is there's been some insider buys, which is generally a sense that, again, I always put more credence in insider buys than insider sells, because that's telling you that insiders, directors, and management of the company believe that the stock might be undervalued where it's at. And that's where the interest is, but short interest is high. Institutional interest is not really that high. So again, you're getting this battle going on. But the insider buys are something to watch. Analysts have been raising their price targets. Some have been, analyst coverage has been kind of mixed, I should say, not really raising their price targets. It's been mixed. Some of the price targets are quite high compared to where the stock is right now, but I think it just remains to be, it's kind of a work in progress, like a lot of these retail stocks are, especially one that's in that grocery area.
Yeah, I think that's a good look at that. I do think that the analyst price targets are interesting on Sprouts Farmers
Yeah.
Market, where late last year, really, or mid last year, we saw some of those higher price targets. But of recently, you're getting more price target downgrades a little bit. So a mixed
Yeah.
bag on that one. It's a newer name, so we'll be interested to see if this one can actually turn around a little bit.
Yep.
Good time to talk about it. Let's talk about Alta. This one had a big drop recently, down
Yeah.
20% in 5 days.
I'll try to keep this one a little bit briefer for you, Bridget, because I think the story is a little bit simpler. The stock's trading off because they had a worse than expected earnings report. The guidance was a little soft compared to what Wall Street wanted to hear. But I think the sell-off has been overdone. A lot of people are pointing to analysts are lowering their price target. But when you look at a lot of the price targets that they've gone to, the price targets are above consensus, even though they've been lowered. This seems like a stock that was probably priced to perfection a little bit heading into the earnings report. Not to mention the fact that the stock, even with this sell-off, is still trading at over $500 a share. So there was probably some profit taking, some people that were willing to get out of the stock, sell first, ask questions later. Stock's heading down to what looks like a very, very solid support zone right around $500, that 495 range. If the stock were to get there, that's definitely a buy signal. But I think investors could feel comfortable getting in on the stock now. It's down 20% in the last 5 days, and that's been since the earnings report. Again, I think the sell-off is overdone. I think it was just one of those situations where investors were looking for an earnings report to confirm good news. They didn't get it, so they sold off, took some profits, and the stock is looking very viable.
All right, very good, Chris. Thanks for taking us a look at those retail ones.
Yep.
I'm going to have you look at RBLX. You had a couple of people in a row ask about that one, and then last week RBLX, and then last week we didn't get to finish Hertz. We were just about to talk about Hertz, and our live stream cut off. Found out it was a Wi-Fi problem. Our Wi-Fi actually turned off. So if you were wondering why, that's what happened. But that's HTZ. So we'll take a look at those two for you, Chris. All right, Thomas, let's take a look at what you were looking at. These are our data center ownerships.
Right, IREN and Applied Digital. Yes, both of these stocks are kind of down off their highs. They've been, hang on, that's the wrong number. APLD. Yeah, down off their highs. They've been kind of consolidating at these moving averages, showing support bases in preparation to move higher based on these swelling outlooks. So they've been expanding their capacities. They've been getting new clients. They've been selling out their new capacities, generating strong revenue growth. And the market really just needs a reason to start buying and send these stocks higher again. And I say that because if we look over at Innoviz, it did rocket higher today because it did get a catalyst. And what happened is that Meta announced a new deal. I think it was like 34. I wrote it down. Let's see here. Where'd it go? Innoviz, $27 billion new deal with Meta for capacity, sent the stock up by 15%. So I think we're going to start seeing some deals like that with other hyperscalers, other large corporations, with IREN, with Applied Digital, with Innoviz, with the other GPU as a service providers, and we'll see other catalysts like this emerging in the next few weeks or a couple of months.
I think one of the biggest things that's interesting about all of these names is it's all so new. These are all kind of the AI infrastructure storyline, and we're seeing so much volatility in it. And we're also seeing, are these companies actually profitable yet? I'm looking at the earnings summary for Innoviz, and obviously this one they're just spending a lot of money right now. And so that's one thing.
Tons of money.
Yes, they're spending tons of money to build these things out. And so I think if does that play into the question at all for investors? Is that why we see more volatility in these names? Volatility also means growth, right? It's not just all negative. And you look at both Applied Digital and IREN, and they're up. I mean, Applied Digital is up 300% for the year, even though it's down off its highs right now. And IREN is still up over 500% for the year, even though it's also down off of its highs. So there's just volatility in these names, it seems.
Right. Volatility just means movement. It doesn't mean necessarily up or down, just movement. And then with this company, the debt and the spending and with the whole group is a concern. So we have on the one hand, this swelling outlook, this market looking forward at how much revenue, how much earning potential there is, drives the market higher. Then it gets to this high peak and it's like, oh, look at all the debt, all the spending, and it gets scared and it sells off. And so now we're down at these low levels, which to me would be a buying opportunity, because all the data from all the other companies and all the hyperscalers is just saying that, yes, they are spending the money. Yes, they are contracting the capacity. Yes, they are using the capacity. Yes, this thing really is real. They really are going to spend these monies and build these data centers. So it's just, waiting for catalysts to emerge. So like today, there was a catalyst for Nebius. Didn't get a specific company, specific catalyst for Iron or for Applied Digital, but they're in the pipes. They're coming down the pipes right now. They will emerge soon. It's just a matter of when and what it is exactly. But I'm not going to be surprised to see, more contracts, more hyperscalers, more enterprises, demanding their services, paying for their services, giving them reason to expand, to build more data centers, and even to grow their outlooks even more.
Yeah, there's one other thing I want to point out with Applied Digital. We always say, past performance does not prove future performance, but I do think it's important to point out what happened at the last earnings report for Applied Digital, because they have an earnings report coming up in April yet. The last one in October, we saw a pretty big spike, not just for Applied Digital, but also for other. Iron also kind of moved along with Applied Digital because they had a really strong earnings report that showed a lot of strong demand. That hasn't changed, or at least we haven't seen data to show that's changed yet. So to see that it's come off of those highs since that October report, and it's down at this level, could we see a move in Applied Digital again at that earnings report coming out in April?
Well, of course. I mean, because what we're looking for is this report to not only affirm that they're progressing with their current plans and realizing the revenue that we know is coming with their contracted backlog, but also see them progress with their new project and see that capacity become contracted, and then to hear news about a next project that will continue to swell the outlook. But really, we're just looking for some affirmation of this really robust outlook. I think it's going to come because all the signs point to data centers and GPU demand being very robust.
All right, very good. There's so many other areas I could go right now. Somebody's been asked about Ondas for a while, so ONDS.
Oh yeah.
And I think AV is in the same area. If not, just look at both of those. So ONDS and AV.
Right.
All right, Chris, what are you looking at?
I'm looking at Roblox and Hertz.
That's right. Interest. I love the variety on the show today. We're talking about penny stocks, we're talking about tech stocks and retail stocks, and now to Roblox.
Yeah, so this is the company that develops. They developed the gaming specifically for younger kids. They commit the immersive 3D experiences in games. So the situation here, Bridget, is there's a lot of noise around this stock, and some of it's good and some of it's not so good. Earlier in the year, the company announced that they had some new deals with Amazon and Alphabet that were going to possibly help them get another revenue stream that was going to be more geared towards ad generation, as opposed to just needing the revenue from people that were on the platform using the games. So that was encouraging, but they've been faced with a lot of regulatory noise in the past couple of months. There was a lawsuit filed about them in January, alleging that the platform failed to enforce adequate safeguards for children. They've made some changes on their platform about facial age verification and stricter age gating that's affecting engagement, because some people aren't necessarily buying into those changes. So again, a lot of noise surrounding the stock. Not surprising, therefore, that when you look at the stock, you see that it's down 27% this year. It's down 6% in the last month. It's one of those stocks that short interest isn't that high, but I don't know. The company's not profitable yet, and that's been something that's been going on for a long time. Revenue's growing, but not enough that would be getting a lot of investors excited for a company that's not yet profitable. It is trading significantly below its analyst price target. If investors are looking for any good news, but at the same time, there are some, uh, there's a lot of noise. I'll just say that there's a lot of noise around the stock right now. It's hard for me to get a really, in a quick overview, it's hard for me to get a real positive feeling about the stock with all the noise going on around it right now.
I feel like there's some anomalies with this one too. One being the upside is so high on this name that's a not profitable company, and on a company again that's not profitable yet, it has almost 100%, like 95% institutional ownership on a name that's familiar, of course, but still not a profitable company. That's interesting.
Yeah, I think that a lot of that would have to do with, again, if you start saying that they're going to be able to start getting ad revenue, that's going to drive up the top line. It should help flow right to the bottom line, and maybe will help them get to profitability. But the concern that I have is there's some pretty serious concern on the regulatory side and on the engagement side, which is particularly important because the site caters to 18 and under, and probably particularly 12 and under. So I mean, it's a dicey situation there. These aren't the 20-something-year-olds that are spending their own money on the platform. These are the people that are probably younger, who are relying on mom and dad for the money to use the platform, and mom and dad might not be so keen on that. So again, in a quick overview, it's hard for me to get excited about it. There just seems like a lot of noise. Just trying to be honest here.
Yeah, I think that's great. Let's do a Hertz really quick. This looks like an interesting stock story. I'm just going to pull up the chart full screen here. They had a huge jump between April and May of last year, and then it's been on pretty much a downtrend since then. What's going on with some of that price action?
Yeah, so I don't know if Thomas is going to want to jump in on this at the end because he seemed ready to talk about it last week. The news about Hertz is that it seems like analysts are getting excited about the fact that for the last several years, Hertz has been trying to upgrade their fleet. So they've cycled through the old cars, they've got new cars in, and that turnaround seems to be over, and the company now seems to be moving in a more positive direction. They're getting positive reviews from customers who like the new fleet, and so now people are starting to think, okay, Hertz might be ready to start on that turnaround story. I think some of that now is going to depend on the broader economy in the short term, but I don't think right now we're seeing much evidence of traveling slowing down, which would be bullish for rental cars. And Hertz is also, like Avis and other rental car companies, they've moved into that program where some people in select markets can buy the cars. So, there might be a turnaround story here. It's covered by a lot of analysts and has strong institutional ownership. So maybe there is a turnaround here.
All right, very good. Last stock for you, Chris, is a random name that Michael brought for us today. I like to see some of these unique names. Okay. It's called PAGS, I believe. PAGS.
Okay.
Let's take a look at that one. I've not heard of it. All right, Chris or Thomas, what are you looking at?
Ondas.
That's right, Ondas.
Yeah. All right, so Ondas Holdings, this is a drone company. The last couple of quarters, the last year, they've made a lot of progress with some acquisitions and the development of some of their subsidiaries to where they've really expanded compliance with, the defense, the Defense Contract Management Agency, the Defense Innovation Unit, getting some prime contractor status for a couple of their units, and really opening up the ability for what they call the rapid strategic procurement of their products, which just opens the door to a lot of government business. So that's a really juicing their revenue and their earnings outlook. It's being seen in the analysts and the analysts and the institutional trends. So analyst coverage has been swelling. They're pointing at about a 50% upside right now, and institutions have been aggressively accumulating at about a 7-to-1 pace, which to me really limits the downside for this stock and is really setting it up for an upside movement once we get that next catalyst, and that'll probably come out with the next earnings report.
Yeah, this name, we've talked about on this before. We talk a lot about drone stocks on this channel because there's a lot going on with these stocks, and this is
Right.
such a perfect example. This was a penny stock, not even a year ago, 9 months ago, seven or. This is a crazy growth story for this stock, and it also is so interesting to see how much growth it's already had, and to see consensus price targets still leading it another more than 50% higher, or some upper targets leading it even higher than that.
All
With so
right.
much growth in such a short time, though, my main question here, Thomas, is it possible that this is just overextended and we could see some more volatility? So if you're already a holder of
Well,
Ondas, do you want to take some profits just out of caution, or is it only going to be up and to the right for this one on the
well, I mean,
move forward?
if you're in it with 1,000% profit, you need to take some profits off the table. That's just the smart thing to do. Um, but as far as the stock price movement and the outlook, what we've seen over the last year or so is, excuse me, is this company going from like having not really much revenue, not much outlook, to having expanded that base, opening up these government streams, and now it's really in a growth phase. Oh, excuse me, guys. I'm sorry. I was sick all last week.
That's all right, Thomas. No worries at all.
I'm still trying to kick it. But yes, so now that outlook is still swelling, still growing into it. We'll have profits within a few years. So really, we're looking at more upside for this stock, I think.
All right, very good. Thomas, I'm going to give you one more name to look at. There's been quite a few, and I'm going to go with just the most recent one. I'm going to go with Open, OPEN. So go ahead and look at that. There's a lot of names that we didn't get to on this list again. We always can't get to everybody, and I wish that we could. All right, Chris, what was that last one that you were looking at? PAGS, is that right?
PAGS, yes.
Yes.
So it's a fintech closely tied to Brazil. It's so the story here is it has a very attractive valuation. If you look at it from, price to earnings is around seven times, even forward price to earnings is around 8 times, which is good when you're talking about a financial company. Price to book ratio is 1.2. So the valuations seem really nice for this company, which I am literally taking a cold look at this here, Bridget. From their earnings outlook is solid, which is good. There's some question right now about the company is very sensitive to interest rates, as all financial companies are. And Brazil has a very high interest rate right now of around 15%. Those interest rates are not expected to go down anytime soon. The Brazilian government has said they're not looking to be cutting interest rates anytime soon because they're trying to bring their inflation down. So it's one of those situations that if you can look past that, if you can look through that, this could be an interesting stock. Analysts seem to be looking through it. The consensus price target is about 23% above where it is, and I'm looking right now. They haven't gotten any recent price target upgrades, but the ones from back in January were even projecting a price as high as $14, which would be about $2 above where the consensus is. So there seems to be a lot of positive sentiment around the stock. But again, I think this is one of those stocks that it's going to be tied to a lot of what happens in the Brazilian economy over the next year.
Okay, interesting one. Again,
Yeah.
price to earnings is interesting for that one too. Thomas, let's get to your very last one, OPEN. Anything interesting happening there?
Well, Open Door looks like a market in a reversal. It's down off its recent highs, but it's at a higher support level than previous. So we're looking at a technical reversal, really linked to their use of AI. They've been trying to kind of rebuild the platform, refocus it, using AI to transform and boost growth and help get it on a track to profitability. It seems to be working. The last results showed some progress. This year, they're supposed to be inflecting to growth. So amid all of this, we've got analysts aren't really on board with the company. They've been kind of giving up on it. But the institutions have been accumulating stock at a pace of 4 to 1 ramping their buying sequentially for the last 3 quarters. So that activity totally is in alignment with the technical outlook and shows them behind this reversal. So they're looking for some more improvements over the next couple of quarters to help drive that stock price. So I see this as being a potentially good play.
All right, very good. We covered so much ground. I kept both of you very late today. Thank you so much for the time today. I did see coming in late was a question about Rich Tech Robotics. I just found that one on my search for my 10 stock list for this week that comes out on Wednesday. So join me then. I'll cover that stock then too. Thanks for joining us, everyone. As always, happy investing.